So keep an eyeball for that.
Tell me.
So one of the things we try to do on this show is, of course, with my brother Joe, of course, is making money, saving money. And one of the two guys that I have sitting in with me, one is my amigo Joe Rose. He is the owner of Desert Rose Tax over on 22nd, just east of Swan, right? Or Craycroft.
Just east of Craycroft.
Craycroft, I knew I got that right. And then we have Capital Investment Advisor Mike Figueroa. Basically, you guys are what we're calling your capital venture visionaries. I like that. Who came up with that that title? Or maybe you've earned it. Is that what we're learning, Mike?
I believe that came through Joe, and it's better than being the ninja cut your head off type person. So that's the political best way to put it, I guess.
So Joe is a tax strategist that's been helping clients slash their tax liabilities legally.
Correct.
For years, as we established last month when you were on for years. And then Mike uses tax and business law for investments and asset protection. So one of the things we're going to try to do today is we're going to teach the folks protecting assets and trying to save as much money legally as possible that you don't have to pay to the IRS and other entities. Does this sound
correct?
So how long have you guys been working together?
We've known each other for over 20 years.
And still friends.
Believe it or not.
When did you guys first come together? Why did you first come together? Because you're similar in what you do, but different in how you get there.
Well, we first came together doing real estate. Right out of college, I went to work for an engineering firm in town who was good friends with Mike. The owner was, and he got me involved in real estate, flipping real estate, and foreclosure sales. And Mike and I just developed a friendship over the years, and we saw things very similarly, very out of the box type thinking, and that's what made us click.
So what makes it, because you guys have your own sets of clients.
Correct.
And you work with clients together. What has to happen that you seek out the other guy? What triggers the partnership to come into play?
Well, it all depends on the individual situation of the taxpayer. I mean, some people may have say that they own their house free and clear. That would be an issue that Mike could help them with, to make sure that equity is protected from any type of litigation. Same with rent properties. Maybe they've been investing in rental properties for years and have paid those mortgages down or maybe off. And in that kind of scenario, Mike would be the type of person that could help them structure their affairs to maximize the return, but as also to protect the assets.
See, for my end of it, I've been involved in directly buying, investing, trading, dealing in real estate and real estate related investments. So what I look at situations for clients is based on my direct involvement. I have been actually in that battlefield, so I look at what the situation is with a given client, then I structure what I think would work, and then I bring it to people like Joe to do the tax and the accounting work. I bring the other parts of it to the different attorneys that I deal with to structure that part of it, but I put together the plan in whole so that it is something that makes sense to the client, and then the other parts, as I said, are done by the attorney and Joe as the CPA. That makes sense?
Yeah, it does. 790-2040 is the phone number. wakeuptucson@gmail.com. If you have any questions, 790-2040. If you want to follow along and find out more about what they do, go to desertrosetax.com. You could also call for a hassle-free consultation with Mike and Joe You call Diane at 747-4964, and she'll set you up for a convenient cup of coffee with these two gentlemen. But let's go pay some bills, and we're going to actually get into the meat and potatoes of some really great strategies to, again, save some money and also protect your asset. Good morning, almost 8:18 in the morning. You are on the DeSimone Daily Double Show. We got Joe Rose from Desert Rose Tax and Mike Figueroa from Mike Figueroa Industries. His little, whatever the name of his conglomerate is, and we're talking about what to do with your capital, how to protect it, and how to protect it and save lots of money from entities out there that may want to impose more than their fair share of taxes on you. Does that sound like a proper?
Absolutely. Absolutely.
So one of the strategies, proactive tax planning to reducing your taxes, one of the advanced strategies you have here, which is something funny because I do work with a lot of family-owned businesses, and I know that there's also let's just say there's difficulties and interesting things that can happen when working with family members. And one of your number one that's listed here is hire family members. So Joe Rose, explain that, how we're going to hire more family members to save on our taxes, and hopefully we don't kill them by the end of the day.
Well, one of the tax strategies we often implement for a lot of business clients is to hire family members. A lot of people have heard about hiring their children, but for example, I had a client one time that was taking care of his parents. They were in their 60s, weren't working, and this particular client was an attorney, and he couldn't, for one reason or another, get much benefit from claiming his parents that he supported. So what we did was we restructured things, and he owned some commercial rental properties, so we set him up with a management contract with his father to manage the rental properties. Thereby, the father could claim himself because he was now supporting himself, and the son was able to take a big deduction for the support that he was already paying the father.
Okay.
So that's a way to transfer income from a high tax bracket individual to a low tax bracket individual.
Let me follow up with what Joe just said. I have a cousin that has a daughter that's at ASU, and she can do web page work. So what I structured for him was the ability to hire his daughter, form an LLC. The daughter works as a consultant to the father's business through her LLC. It moves her money from being non-deductible, where he's paying her college expenses, to being deductible as a business, and I think that would work, wouldn't it, Joe? And so she pays her bills. She gets a couple of grand a month, and she pays her own bills. She's going to file her own tax return, but of course her tax bracket is substantially less than the father's, and this way she's learning how to conduct business for herself. She's enjoying it. The father's happy, and he actually gets work from her because of the research that she can do for him in his business.
So, Joe, what's the when in that kind of situation where this gentleman's hiring his daughter and paying her college expenses through paying her to be a consultant for the company, what's the how much can you deduct of college costs and things? What's the maximum kind of things that they could deduct for something like that?
Well, there's three different college benefits. There's the American Opportunity Credit, which was an extension and expansion of the Hope Credit from the Bill Clinton days, and that is up to, I believe, is the first $4,000 that you spend for college-related expenses, including tuition, books, fees, parking permits, that equipment, and things like that. The second is the Lifetime Learning Credit, and that is the first $10,000 to maximize that credit, I believe, and that only includes tuition, nothing else.
Now, is that something that anyone can do as a parent, or it has to be structured in a certain way?
Well, in this particular situation, the daughter, since she's paying her own expenses, would then deduct those on her return and save on her taxes.
Gotcha. Now, let's say right now I have someone who's just a parent with a child going to school, all right, who doesn't work for them as a consultant. Can they take advantage of those credits also?
Absolutely, absolutely, depending upon their income. All the credits and deductions in the tax code have income limitations to prevent the higher income taxpayer from taking full advantage of these.
What's the threshold, roughly, you think, for something like that?
Boy, you got me there.
Okay, that's all right. We'll find out. So now, in relation to hiring your family members, what's the extent? You can hire as many family members as you like? Is there a max on what you can pay them and deduct from them? Is there any limitations in that?
Well, the only limitation really is that it has to be bona fide employment. It can't just be that you put your 5-year-old kid to work and pay him a $30,000 salary, you know.
I'm sure it's been tried.
That's just unrealistic. But in this day and age, like Mike was referring to, you know, with the internet and the web design, things like that, how much would you pay a web designer to design a web page for you?
Well, some of them are charging thousands of dollars for a website.
Exactly. So no longer do you have to be limited to emptying the trash and, you know, sorting files. You can now hire your children. They're much more adept technology-wise than we are.
My VCR is still flashing 12 right now.
Absolutely, absolutely.
But keep in mind, when it comes time to fire the kid because he's not doing a good job, who do you have to hire to fire the kid? So,
and that is the double-edged sword.
Yes, it is.
Of the family employee is how do you manage it, and how do you, if it really does get bad enough.
Maybe what you have to do is hire somebody to hire.
I wouldn't want to be in that position.
The 790-2040 is the phone number. wakeup@gmail.com. We're on with Joe Rose and Mike Figueroa. We're talking about how to save you some money and also protect your assets from the forces that be out there in the best legal, ethical way humanly possible by pushing all the buttons humanly possible too. There's nothing wrong with that. 790-2040. Let's go to Bill number 2 on line 2. Bill, you're on with Mike and Joe. What's up?
Morning, guys. Before I get to my thing, it's about IRAs and that, but it's amazing. This isn't derogatory to you fellows. It's just amazing the amount of hoops we as human beings and taxpayers have to jump through just to survive out here with this code and all this stuff. But you're right about putting family members on the payroll in some form. If you can do this to your young children, they can lick stamps and put them on mailings or whatever. You can start funding an IRA for them at a very early age and let that start compounding long before they're 18 years old or whatever. So that's always a good thing.
Exactly, and I'd absolutely encourage you to do something like that, because as long as you take it out of their wages, yep, that would be a great way to do that, so that they don't spend the money and waste it on nonsense.
Yeah, and for business owners, it's much better than the 529 plan.
No question. No question. Well, anyway, that was my comment, guys. Thanks.
Thank you, Bill. Have a good day. 790-2040 is the phone number. wakeup@gmail.com. Join the conversation. You have two guys here that can really answer your questions and right away give you some good ideas to save you some money. Remember, if you want to set up a conversation with any of these gentlemen, 747-4964, desertrosetax.com. The next thing you have on your list is CHIC and captive. Explain this to us rookies out there.
Okay. Well, Chris, this is a phenomenal tax strategy that you can implement if you're a business owner and you meet the qualifications. You have to have several $1 million in sales. It can't be a small business, but it what it is the CHIC is a closely held insurance company, and it's better known as a captive insurance company.
Yep.
And they're very popular with the huge companies out there, but the small companies can also take advantage of that. And one of the keys to setting these up is you have to have an insurable risk. And you can either replace or supplement your existing insurance through this. And the tax strategies, the tax benefits are derived from this type of a strategy is crazy, because under the code, the first $1.2 million in premiums that you pay this company, and this is a company that you've set up and that you own, basically, your own insurance company.
So basically, you're establishing this fund of money to self-insure yourself in whether it's any sort of insurable risk. We're talking.
Correct.
Okay.
And you can set aside and take as a deduction on your business taxes up to $1.2 million in insurance premiums paid to this company, and that company will not pay any income tax on that under the code as it's written right now. Now, in the future, this is a long-term plan that should be implemented at least over 5 or more years. But when you ultimately cash out and close your company, then that money returns to you at capital gain, long-term capital gain tax rates, which right now is maximum 20%. And I got a story for you on that one too.
Sure.
I had this client that had a captive insurance, and he had been funding it through the years. In the year that he closed it, it was during the recession, and he just so happened to have very low income on his tax return, so he was actually in the 0% long-term capital gain tax bracket. So when he cashed out that captive insurance, he didn't pay a cent.
Interesting.
In federal tax.
So basically, you can max out about $1.2 million in something like this?
Per year, yes.
Oh, per year.
Yes.
Now, does the government require? They always want their taste of your money, so they don't require you to distribute it at a certain point in time, or?
No. It is a legitimate insurance company set up under the insurance laws of the state where it's residing, and so it has to abide by all the federal tax laws regarding insurance companies. So it won't pay tax on the first $1.2 million in premium income, but it does pay tax on any investment income that their cash reserves are earning.
So what was the purpose originally for the government to even allow such a beast to be created and exist?
Well, our whole tax code is made up of special interest groups, so there is no telling who actually started this.
Okay.
But this is good for doctors and people that have high risk and high premiums for malpractice or things related to that type of business, so that you can, it's cheaper, it may be cheaper for you to utilize this process and this strategy than to pay an outside insurance company, because if I'm right, you can also have a backup insurance behind you that covers anything in excess of the insurance that you're setting up through the captive.
Oh, absolutely. And the construction industry has a lot of risk out there for injuries and different things like that. So that would be a good industry that could utilize this type of strategy as well.
In the old days, when the government used to let me have high deductible policies for my company, was this be something they would use to supplement that use something like this kind of vehicle to do that?
They could. They could, yeah.
All right, let's do this. Let's go pay some bills. We got another break. We got Joe Rose from Desert Rose Tax, and we have Mike Figueroa. We're going to go through a couple of more strategies here to help you save some money and protect your assets. Please join the conversation, 790-2040. Wake up Tucson at gmail.com. You're on 1030 KVY, The Voice. 36 minutes after the hour, we're on with Joe Rose from Desert Rose Tax on 22nd, just east of Craycroft, and Mike Figueroa, Capital Investment Advisor. We're talking about how to save you some money and protect your assets. We're talking about some advanced strategies. If you missed the first couple of segments, we're talking about how hiring your family members to do bona fide work for a company of yours can actually save you a lot of money.
Yes, a lot of money.
And do it in a smart way. Mike was explaining the story of a friend of his whose daughter is going to ASU, and he hired her to do bona fide web design work for his company, and is basically paying for most of her college expenses through the company, and pretty smart.
Those work. Those work.
And then we also talked about the use of captive insurance for higher earning income folks and companies out there to try to shield up to what $1.2 million a year.
Correct.
So if you want to find out about this over a cup of coffee, remember desertrosetax.com 747-4964. So Mike, our next thing was talking about self-directed pensions and retirements.
Yeah. So let me explain how that works. You have IRAs and pension plans that you either can manage directly, or you can have an investment advisor like a stockbroker manage that for you. So you would fund it, and then the stockbroker would advise you what to do, and then he would make investments in mutual funds or specific stocks. My plan that I deal with, because I'm primarily a real estate broker dealer, is how do you use a retirement plan in real estate? And the way you can do that are a lot of people that I consult with either buy, fix, and flip houses,
right,
or they buy and hold rental property. And so the whole idea behind using a retirement plan, which is a self-directed IRA or a profit-sharing plan, would be to have the plan invest the money in the real estate and do the transaction. So the way I structure it is I have the plan own an LLC 100%. The LLC is the entity that buys the property,
right,
be it a rental or fixer-upper. And the plan lends money to the LLC and takes a deed of trust on the property or mortgage, so that if anything happens where a worker falls off the roof and breaks their back, or somebody has a problem, at least you have some kind of a protection with the mortgage protecting the equity. Now, when the rents come in or the property is sold, the profits go into the plan tax deferred until you take it out at age 59 and a half, but you take it out by 70 and a half. So the concept of having your profits held tax-free and reinvested, right, for a period of years, I believe is a good possibility. A lot of people believe that you're going to have higher tax rates in the future. I've seen the tax code change every couple of years, so anything that you plan for the future really never happens in tax law. It's always a change. The only thing I would say on when you buy and flip properties through a pension plan, you've got to be aware that if you do too many of these, you become a dealer and it becomes what's called UBTI. It becomes taxable income. So you would get together with your tax advisor or Joe here that would be able to...
What's the threshold that too many and they start considering you a dealer?
There is no bright line. I've heard...
What's a neighborhood?
5.
Okay.
5. But there are techniques that you can use to do it without being in the taxable side of the transaction if you structure it right. But that is a very good way to utilize your pension money, your IRA money, if you want to do that. So, Joe, Don, Joe...
Now, here's a question before what I want to do is, who is this right for? Okay, anyone who wants to start, how would you say who's right and who's not right for doing this kind of planning?
Let me give you an example. I am close friends with a guy that was a fireman commander, and I sat on the police foundation board, and I got to know a couple of officers. And between the firemen and the officers, they have time in between their work to piddle with a house here and there. So let's say the fireman, he was able to do a house a year. He'd find one house, he'd work on it on his free time, and after 30 years, he was able to accumulate 18 houses that substantially became free and clear of debt. They were structured like I mentioned, and now he can start cashing them in little by little, and he has a retirement income that is safe, under his control, and he doesn't have to worry about the stock market crashing or anything else. They're his, and he can manage them and deal with them. So those type of guys work. Of course, always real estate agents and brokers do this, but just about anyone that has time on the side and is handy and would like to do this type of fixing work and manage rentals, one a year is not a hard thing to do, and over 20 years you now have a substantial retirement account that is safe.
Now, when you get to the magic 7.5 and the required distribution, you're just building up in the other part of it your cash anyway. So if you needed, let's say you like your income from your rental, you can do the best of both worlds.
Well, remember, in the case that I'm talking about, you could have the rental property either owned by you directly or through the plan.
Right.
But in time, you're going to have to sell those properties off. And or cash in the rental income that becomes a distribution to you, and then it becomes taxable as ordinary income.
Right. Okay. Well, again, it's the idea that we have lots of people who have that one or two rental homes that I know are listening to the show. So in relation to, let's say they're not doing it under this self-directed pension plan right now, is it difficult to do it if I have a couple of these houses right now?
No, it is not. If it's not within the plan, you can do it outside of the plan. The key thing I'd say for asset protection purposes is I structure a transaction where if the property is owned in your name, you would convey it to an LLC, effectively sell it to an LLC. You would then take back a mortgage, like it's called a purchase money mortgage, to yourself, and you would contribute that mortgage to your, if you set up a living trust, like a revocable living trust that most people are structured with, and that trust owns the mortgage on the property. So again, you would have protection to a degree from lawsuits that happen, and I could tell you a quick one that I dealt with, and that was where I had made a loan on a property that I had to take back, that the party deeded the property back to me. I put it back out for rent. I had it structured with my LLC having a mortgage back to my trust, and the tenant that was there said that there was gas that came through the sewer lines, made her sick, so she had to sue for $50,000 she filed, and my LLC protected me from a judgment that would be entered against the LLC as the landlord and protect the equity in the property from being attached. So things happen like this. You could easily see somebody visiting, falling down, breaking their ankle, some kids playing around and getting hurt.
So before the paperwork and to do all this, what is the complication level of setting? Because you're an old pro at this, so you're like, well, you set up a family trust, you do this over here. Joe, what's the hassle level on this?
Well, the main thing, Chris, that we're talking about with all of these strategies, in addition to what Mike has just said, is the key word is structure. You have to have the correct structure in place. So it's not something that I would encourage anybody to try to do by themselves. They should seek out a professional that has experience in these areas to be able to put together the proper structure. Because without the proper structure, you run the risk of creating extra taxable events or running afoul of the IRS.
Okay. So again, you gotta. I understand. You gotta do you gotta set it up correctly to reap the benefits and save yourself headaches later.
Generally, your costs are, in a case like that, it could be between $1,500, depending on the attorney that does it. I do LLCs for $550 and structure that. Trusts, I can do some of those, but I usually consult with a trust attorney that is an expert at it. They charge anywhere from $800 to $1,500, depending on how complex it is. But that's part of the bigger estate plan that involves more than just the rental property. It involves all your net worth and how you pass it through to your heirs over time.
All right, we got one more segment to go with the guys. We got Mike Figueroa, we got Joe Rose. You want to set up an appointment with these folks? 747-4964. Meet them for a cup of coffee, and they can explain a lot of these things in a very nice, hassle-free way for you. And if it fits for you, this might be some of these strategies might work for you and your family and your business. So 747-4964, DesertRoseTax.com.
A man walks down the street, he says, why am I soft in the middle now? Why am I soft in the middle? The rest of my life is so hard, I need a photo of
8:50, almost 8:52 in the morning. You're on the DeSimone Daily Double Show. Sean McCluskey's coming up next on the Talk of the Town. We got Joe Rose here from Desert Rose Tax over on 22nd, just east of Craycroft. 747-4964, 747-4964. And then we have his partner, Mr. Mike Figueroa, who's a capital investment advisor. They've been spending the hour trying to figure out how to help you in this crazy world protect some assets and save some dough, because every dollar is more precious than ever out there. So, Joe, we were talking off air a little bit about the politics of what's going on nationally, the culture of this society where everyone does want their fingers on your money.
Absolutely, Chris. And in this election cycle that we're hearing on both sides, tax reform plans and tax increase plans, the reality is there's too many special interests in the tax code that we're not going to get a flat tax anytime in the near future. And we owe so much, $18 trillion in debt, that at some point there will be increases in the tax rate. So if not now, it'll be down the road.
So we talked about in the first hour of Wake Up the Democrat debate on Saturday, and the moderator says, so you want free public college for everyone? They're like, yep. And you want this? Yep. And you want $1 trillion of infrastructure? Yep. And we never talked about the cost of Obamacare, Social Security, interest on debt, and Medicare.
Absolutely.
Okay.
Absolutely.
Which, according to Congressman David Schweikert, who calls the show every week, those things will take up 75% of the federal budget by 2020. So we'll have 25% of a budget left to run the government and the military and all those things.
Well, and I don't know where those figures come from, but if you just think about it from an economic sense, Chris, that once interest rates do start moving upward, that debt service is going to just exponentially increase. And between the government wanting your money and the litigious society that we live in, that it seems like so many people out there are after you to get to your money. And that's why we're spending this time talking about strategies to protect what you have and save money to where you have more money to invest for your future.
One thing I'd like to mention, based on what Chris just said, is what governments normally do, and I just gave him a
$1 trillion
copy of a $100 trillion Zimbabwe piece of currency. as you can see, most of you probably have experienced the devaluation of the peso, the ruble, the Brazilian real, the Argentinian money. Everybody remembers things about the Deutsche Mark from the Weimar Republic. So the way you pay your debts back is you destroy the value of the currency so that you can pay the debt that's long-term with garbage money. So always be aware that you have to have the ability to move your money around and get out of something, because long-term you may have worthless Zimbabwe money in time.
790-2040, 8:55 in the morning. So in relation to a family, small business out there, give us the cross section of what they need to right now pay attention to top of mind.
Top of mind, I would say you need to sit down. This is the time to do that tax planning before time runs out for 2015. Don't wait until you sit down to do your taxes during tax season. This is the time to come in and talk to somebody like Mike or myself and get that structure in place before year end so that you're not caught behind the door.
Right. Now, the question is, what is the chaos of Obamacare this year? Is it more than last year or about the same?
Well, it's going to be a little different this year. Everybody that has health insurance will receive a special form 1095. It may be an 1095A, 1095B, or 1095C.
My brain hurts,
I just love
Joe.
this alphabet that they put together.
My brain hurts, Joe.
But one will come from the exchange, one will come from your insurance company, and one will come from a large employer like Raytheon, for example. You need at least one of these documents. You may get more than one, but you need at least one of these documents for each person on your tax return to do your taxes this year. Just one more thing to keep track of.
One day, the next time you come back, I've had lots of questions of how to, if you don't have insurance and you want to negotiate penalties and all that stuff, how that works one day. We got to figure. I don't know if there's any strategies out there yet that you guys have figured out on Obamacare, but start thinking about them for the next show.
Okay.
I thought they shoot you if you don't have your.
But there are many strategies, and we've just talked about a few of them. That's the importance of getting in early before year end to talk about these, because there may be many that you can utilize in your particular situation.
Yeah, it's easy to get wrapped up. I understand Christmas shopping, holidays, bad Christmas parties. But if you can get something in the structure going before December 31st of this year, it could save you a lot of money coming up next year and in the future. But do it now.
Do it now.
All right. So 747-4964, 747-4964, desertrosetax.com. So, gentlemen, thanks for being out in the front lines and trying to push the envelope in the most legal, ethical way for us to stop paying as many taxes as we do.
Well, thanks for having us,
Thank
Chris.
you, Chris.
Knowledge is power. So,
Amen.
Check out a cup of coffee with these guys, 747-4964, desertrosetax.com. And we are being filmed right now, so I feel very, very honored that.
Yeah, you even combed your hair.
I did comb my hair today. I just threw on my Star Wars hat this morning, and I figured, well, even if I comb my hair, it's going to get messed up by the hat anyway, being it's kind of a cool day. So, Joe Rose, Desert Rose Tax, check it out, desertrosetax.com. Mike Figueroa, how do they get a hold of you? Just
my office number is 425-8759.
Okay, one more time.
425-8759.
All right, gentlemen, thanks for doing what you're doing out there, and we shall see you soon. Joe Rose, Mike Figueroa, give him a call. Wake Up Tucson, Sean McCluskey's coming up next on the Talk of the Town. He's got Mr. Jim Kelly on with him. Wake Up Tucson, we'll see you in 21 hours.